Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Jacob Sonenshine. He's a markets reporter over at Barron's to discuss what's happening in the tech sector specifically, but we're going to take a run around the horn here and get into some other areas of the market as well. Jacob, certainly no shortage of topics to talk about in the market. I love having other reporters on the show to get their perspective. And I want to kick it off with big tech because you think that there's a new leg of future growth here.
Yeah, there is. It doesn't mean I think that big tech stocks are the best place to be right now. They're definitely worth considering for sure. But what we saw in Q1 from those reports a week or two ago, we saw honestly artificial intelligence actually starting to kick in and drive a little bit of growth. There was a Morgan Stanley analyst on Microsoft that said their AI advancements, and of course with their cash, their ability to invest, and their existing technology and their engineers, they're able to take that AI, and that actually contributed 1 percentage point of sales growth to Microsoft Azure. They're enhancing their product. What that sounds like to me is that, and this was in the Morgan Stanley note as well, was that they're actually taking a little bit of cloud market share. So the cloud market is growing but decelerating, but Microsoft remains real good in market share, and part of that is AI, and the other big tech names are also benefiting from that.
They certainly are. Now, what about small cap tech?
Small cap tech is definitely a different story. There's tons of secular growth. If you're a small, let's say a small software company that offers a value-added product, you've got 20, 25%, 30% sales growth. There are some companies that sell software on a per user basis. So when those users, they could be developers, they could be other types of employees or engineers at a customer, when they get laid off, which is happening in this environment a little bit, your sales on a per user basis get hit. So maybe it's not 30% growth. So they've got plenty of growth. But the problem for those small cap companies, they have to compete against Microsoft and AI, stuff like that. I'm thinking software. And the other problem is that if they can't get to profitability quickly enough and they have to rely on raising equity, it's much more difficult to raise equity with rates way up from where they were before the Fed started hiking.
All right, well, let's talk about that right now. It is 1:38 Eastern. We are going to get the Fed rate hike decision in just a few moments here. What are your thoughts over at Barron's in terms of what you're thinking about the Fed, what happens today, policy shift, and how it impacts the broader market?
So we know we're probably going to get a 25 basis point hike. I think we might even be getting that as we speak. But I think the stock market has priced for, and the rates market has priced for the outcome that there's a pause in rate hikes. If we don't get that outcome, the market's going to get hit. Guess what? If we do, the S&P 500's been getting some serious resistance at 4,200, and the market may like to see the Fed say we are pausing rate hikes because inflation is declining. But in order for the S&P to get above 4,200, which is a very expensive level, the market needs to be confident that the economy isn't already experiencing some destruction. Problem is, it is.
Right. Well, I want to talk about another sector right here. You think healthcare is interesting. We can't get into specific names as an exchange, but what are your thoughts around this sector in general?
All right, so healthcare is obviously your safe defensive sector. One problem is that the dividend yields relative to the 10-year Treasury yield, not quite good enough to buy for as an income investor unless a company is going to aggressively grow their dividend. The other thing with healthcare is there are some growth opportunities. Humana and United Health come to mind. I'm sorry, you don't have to talk about this. I'll stop. But Medicare Advantage is a huge driver of growth in healthcare. There are some drug makers that need to refresh their pipelines. The ones that can do that can see their stocks do pretty well. The only issue is, again, and I see this everywhere I look in the market, healthcare stocks are expensive because of that defensive play. They've been bid up. So there are some great opportunities in the drug space and in the healthcare insurance space. But again, healthcare stocks very expensive. So I look at a lot of sectors and say, just wait.
So is there any opportunity out there where it's from a valuation perspective, it looks a little bit more attractive than the defensive names compared to packaged good products or healthcare where people have been putting their money into in this kind of environment?
Yeah, there are some individual names that I've looked at that I plan on writing about that I don't want to talk about before we do that.
What about a sector?
Oh, sure. A sector. You got to give me a second to think about that. Staples are a little bit expensive. I really have to think about that, and I think one of the things that comes to mind is that holding cash at 4 or 5% is not a bad idea when valuations across sectors and styles of equities are expensive.
All right, Jacob, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.